Ladies and gentlemen, welcome. It is the 6th of July, 2016. This is Christopher Aaron with our weekly gold and silver update. There is a significant move underway in silver and in gold. We will cover everything. We are going to focus more this time on the long-term picture, and I'm going to spend some time doing something that I don't do very often, which is for all those people who have expressed interest in the gold mining sector. We're going to look at the trajectory that is shaping up for. These are some lifetime changing opportunities that are setting up here in gold and silver. I think people are starting to get a sense of that. And mind you, it was only 6 months ago that most people were saying silver is still going down. It's going down to 13, 12, 11, 8, $5 an ounce. I specifically didn't care. If I thought the metals were going to keep going down, I would short them and try to make money that way. But all of the data that I see is showing me that these markets have turned the corner, and I'm so glad that there are people out there who are making significant profits right now and hopefully setting themselves up for the possibility of doing some wonderful things in the future with these resources, because that is ultimately what I'm trying to do. I did spend some time working and contributing in the wars overseas, and that is something that I regret looking back on it, being involved in the destruction and the killing. And I decided that I wanted to do something with the next part of my life to try to help and try to share some information that will open up people's lives. So that is why I'm here. Thank you for joining me. We are going to start looking at the GDX fund. This is the average of about 50 gold and silver mining companies. We don't usually start this way. If you were expecting, when you clicked on this video, for a simple, this is what gold is going to do, this is what silver is going to do, you have come to the wrong place. That is not the type of analysis that I do. This is way more important than that. Anyone who claims to be able to do that sort of thing, other than in the short run, is probably lying to you. There's a lot of serious work to be done here because the opportunity is so large, and that's what I want to try to present to people. To you, thank you for being with me. The GDX fund has risen 150% from the absolute lows in 5 months. 150% for an entire sector. That is amidst moves of 24% in gold and slightly higher than that in silver. So there's a major leverage effect happening here in the gold and silver miners. I never recommend that everyone own only the gold and the silver miners. I own a nice stash of physical metal that I keep accumulating outside of the banking system regularly. I think that is very important. But that said, the ratio between the miners and the metals themselves hit a historic low at this bottom, at this generational bottom. We will look at some of that data. I believe people who are setting themselves up now will be changing the course of their lives within the next 3 to 5 years. We've seen that already. I have emails from people telling me I made 200% on the most recent trade. I made $20,000 based off your information over the last few months. Thank you, and I thank you. I want to be doing this together. I expect the GDX fund has hit an important medium-term topping area. Why? We have significant resistance in this zone between 27 and 30. Notice this goes back all the way to 2013. There was record volume coming in at the lows. No one wanted anything to do with these miners. I wrote an article on the 1st of February. I will have a link to that. It is on the record. I said this is a generational opportunity setting up. And since that, we have seen nothing than an impulsive move higher in this sector. I think this is the very beginning. We zoom this out, the GDX, to the 8-year view. And we can see this resistance here that I'm talking about between 27 and 30 is just being hit right now. It would be very rare for any sector, any stock, any fund, any commodity to go down for so many years and then just break higher through all levels of resistance immediately. I have never seen such a thing happen before. So every piece of data that I look at is telling me that the gold and silver miners are probably reaching a point in here where they're going to need to consolidate for some time. Perhaps have a modest correction. Perhaps that comes a little bit higher from now, even. That said, after this correction or consolidation is over, we are going to look at the entire sector breaking out of a stage 1 base. These are the most powerful setups to get involved in. And I'm going to show you, even though this has moved 150% higher in 5 months, this move is only just beginning. We are backing this out now again and using a different index. This is similar to the GDX, but the data goes back much further through 1984. We are looking at a generational time frame of the XAU Gold and Silver Mining Index, which contains about 25 of the largest gold and silver mining companies in the world. And you can see what I mean. We hit a generational bottom here in the range of 40 that was hit also at the absolute lows in 2000, 2001. Mind you, this was when gold was $250 an ounce and silver was $5. The miners had an inverse bubble, if you will. Inverse meaning a bubble is when things go higher, an inverse bubble when they move lower. No one wanted anything to do with these companies in the lows. Everyone thought they were going bankrupt, would keep going down forever. And we have seen this move higher, 150% in 5 months, a springboard reaction here. This is the strongest surge that has ever been seen in the last generation in the gold and silver miners. So even if there is a correction here, you can see this resistance coming in here on the XAU around 110 based on these swing highs from 2013. Sellers should be emerging here. Even if a modest correction unfolds here, this will be the final buying opportunity if you want to be involved with what is setting up over the next few years. When we see these types of moves higher in such a short time frame, this is telling us something is happening here. This is a different trajectory than we have ever seen. This is important. We're switching over to look at an analogous time period. What can happen after these multi-decade consolidations? I showed this about 6 months ago. There's a lot of new people here, and I welcome you. And I want to tell you, you're really living through something that is historic right now. We're looking at the Dow Jones Industrial Average. This is the average of the top 30 companies in the United States, some of the largest 30 companies. We're looking at the period from 1959 through 1982, a multi-decade consolidation. Most people don't study this period in history, but we can learn a lot from it. The Dow went back and forth between roughly 600 and 1,000 on the upside for 23 years, consolidating. This is very similar to the consolidation that we have seen in the XAU over the last 35, 36, 40 some odd years. What happened after this consolidation in the Dow? Mind you, everyone who sold here at these lows or here at these lows saying 750 was the low, what did they miss? Let's fast forward this 20 more years. That final chart ended right here. Here's the consolidation between 600 and 1,000 for 23 years. And then from 1,000 to over 11,000 in the following 20 years. The idea here is that these multi-decade consolidations set up for multi-decade advances. Multiples of the previous high. Keep this in mind. Let's look one more time. Here was the 23-year consolidation. Flip this back over. Here are the gold and silver mining companies in an even longer consolidation. If this doesn't turn you on a little bit or get your appetite a little bit wet, if you were just thinking about this for the first time and you're thinking, well, I missed the 150% surge in the gold and silver miners, you have not missed this. What I'm saying is, yes, there could be a 20, 30% correction here over the next month or two. The gold and silver miners are going to be hitting a multiple of the previous all-time high within the next decade following the breakout of this, similar to what we just saw in the Dow. This is going to blow people's minds. This is what happens after these multi-decade consolidations. Okay, so we do tend to get focused on the short run sometimes. It's very easy to do that. We can see these mining companies moving 25% higher in one day, falling 15% the next day, rising 18% the next day, and it's easy to get really caught up in what's happening in the short run. I agree. But there is something much more significant setting up here for the long run when this breaks the long-term resistance zone on the XAU, which I anticipate for some point in the next 2 to 3 years. Let's look at how this is going to set up with the physical metals themselves. As I have here my trusty gold coin that I keep with me at all times, my favorite gold coin that I got on a trip to Australia in 2009, one of these beautiful Australian kangaroos. I showed this pattern as well about 6 months ago, and it was hard to believe at the time, but it's setting up even better right now. What is this pattern? This is a bull flag. This is a generational bull flag that is setting up in the gold market. It may not be ready to break yet. It may have some additional consolidation or even a correction to go. Here's the long-term trajectory as I see it. What is a bull flag? Here is the pattern from a textbook on technical analysis. A bull flag is where you have a strong move over a period of several months or several years. You then have a flag-shaped correction that moves against the primary trend, followed by a subsequent advance roughly equivalent to the initial advance. So we can see that setting up here in the gold market, the advance from 2001 to 2011, 10 years forming the flagpole, a 5-year correction forming the flag, and when this upper blue line here breaks, which currently comes in the upper 1300s, we will be looking at the beginning of a move that should equal this first move. Now, there are two ways to measure the potential target for this. Mind you, all these charts are, is showing the psychology of the markets. It's showing what are people doing. What are people focusing on? What are the fundamentals? The charts show what is happening with the fundamentals in an unemotional language of ups and downs and repeating patterns throughout nature. What would the target be when we break this upper part of the flag somewhere right below $1,400? The dollar target would be $2,700. If we are measuring and we're saying the move from 250 up to 1900 gives us an amplitude of roughly 1650. Add that on to the 1050 low. That gives us a target of roughly $2,700. There is another way to measure this target. No one has the ultimate 100% crystal ball. Different books, different forms of analysis will measure this in different ways. We can also measure this as a percentage move. A percentage from the 250 low to the high at 1900 was roughly a sevenfold move, roughly 600%. If we measure a sevenfold move from 1050, gives us a target of somewhere in the vicinity of $8,000 an ounce. Now, of course, this would not happen overnight, and we are just seeing the beginning hints that this market is thinking about setting up for a move like this. We would expect the amount of time to be roughly equivalent to this, a 10-year move setting up when this downtrend is broken. It's not there yet. There could be a retracement. Let's keep the big picture in mind if there is any retracement. Silver, very briefly, a very different pattern. This is once again a multi-decade consolidation, this time below the $50 level, hit in 1980, again in 2011, setting up for the next attempt within the next few years. Some people have asked, is this moving quicker than even I anticipated? The answer is yes. Absolutely. And this is why I maintain a strategy of significant core metal holdings and significant precious metals mining company holdings that are leveraging these gains in the metals. And I do not trade those because I recognize my own limitations as a human being. Any trader or investor who tells you that they have the 100% truth, they're either delusional or they are full of themselves. So I build into my model a human capacity. My human capacity says I can only predict some of the short-term moves, but I see the generational patterns setting up, and therefore I want to hold on to my core holding for the bulk of this move. I think it's very important that you segregate the different parts of your strategy in your mind for these moves that are setting up so that you never become too focused on a quick $1 or $2 drop in silver and panic and sell only to see the price rebound and move higher a few days later. The pattern for silver when it breaks 50 will give us a medium-term target of roughly $95. I do not believe that will be happening this year. I believe that will happen sometime in the later part of this decade. Once again, I maintain the right to alter that when the facts change. We're looking the executive summary. Thank you for sticking with me, and I really hope this has been useful for some people to appreciate the ramifications of what we are seeing now. We're seeing the currency debasement. We're seeing the negative interest rates. We are seeing the drop in the British pound. We're seeing other countries in the euro start to waver and consider leaving the EU. We know the United States has an unsustainable debt situation. Other countries around the world, even so, have seen their currencies fall against the US dollar by more than the US dollar has even fallen against the price of gold. So gold and silver are rising in all currencies for these fundamental reasons, and we are trying to gauge the moves here on the charts. Support in gold is between 1285 and 1305 should we see any retracement. Silver, bullion, the breakout is underway. I will look at some of the more short-term patterns that I'm seeing this time next week, which show me that the potential top is going to be between $21.50 and $25 for this move for silver. And support on a retracement could fall all the way back between 17 and 1875. Different targets, different patterns that give us these ranges. The mining sector is at a major resistance right now. A generational breakout is expected within the next 2 to 3 years. If you are just beginning to become interested in those companies, I would encourage you to do some serious research and not try to rush your research. because of the significance of the move setting up here. It truly deserves your attention. Thank you once again for joining me. I will see you this time next week. Have a lovely midsummer week coming up. The next video will be on Wednesday. Have a nice night.